So this concludes the first session of the day, and let me move on to the second session. And in the second session, we are going to deal with the theme of green leadership for global sustainable group in panel discussion. I would like to introduce you to the panelists. First, Professor Hong Jong-ho of the Graduate School of Environment Studies at Seoul National University will be the moderator for this panel discussion. And as a panelist, first we would like to introduce you to the previous speakers, Professor Ben Caldecott, Senior Advisor, Michael Sheren from Bank of England, and Director Piers Haben from EBA will be joining us as panelists. And not by least, we have an offline participant from KAIST Finance Graduate School. We have Professor Kwangwoo, who is also the 38th President of Korea Securities Association. Please welcome Professor Park as well. So I'll pass the microphone to Professor Hong Jong-ho. Good morning, ladies and gentlemen. I'm Hong Jong-ho from Graduate School for Environmental Studies at Seoul National University. And in this panel discussion, we are going to talk about green leadership for global sustainable growth. We have already heard from 3 speakers from the United States and Europe, and based on their presentations, we are going to have a deep dive into ESG and green leadership related topics. So, environment, energy policies, and sustainable policies are my area of research, and I'm an economist, and people sometimes ask me, as an economist, why are you teaching at graduate school for environmental studies? And I think the answer can be found in ESG. And environment and economy are no longer conflicting each other. So we need to get away from this dichotomic point of view, and they are inseparably related. So I think this forum is a good testament to that. So as all the 3 presentations had this sustainable financing and ESG financing in their presentation titles, ESG is certainly the biggest issue of our times. It's not something new, but it has become definitely the most important keyword in international financial community. And the biggest driver for that was the COVID-19 pandemic, and then our sense of urgency, escalating sense of urgency against the climate change. So recently, many people ask, why are we paying so much attention to ESG now? Because corporations' performance is evaluated basically based on financial profitability. But I have to disagree on that. ESG allows corporations to be socially responsible and then also support their journey in finding new growth opportunities. Environment, society, and governance, they would be the most critical factors in determining new growth and market opportunities. There was another forum that was supported by the Asia Business Daily, and one of the distinguished guests said that ESG stands not only for environment, social, and governance, it supports for enhancing sustainable growth, promoting the sustainable growth, and I fully agree with that point, because ESG reflects the changes in preference of investors and consumers in a way that promotes sustainable growth. And financial community is going to play a very important role here, supporting corporations' transformation, and financial sector has to play a very important leadership in bringing about this transformation. And we are joined by 3 speakers from abroad for this panel discussion, and they have all talked about green financing and sustainable financing. And Professor Park, he is also the head of Graduate School for Finance at KAIST, the most renowned expert in Korea in this field. So in Europe, it's like 2 o'clock in the morning. So it's the wee hour there. So since we could not be connected live, we have asked the questions and got their answers in video recording. And since the speakers are foreign speakers, allow me to ask in English.
Corporate world. Could you explain the background of it? Why is green finance regarded as so critical in achieving corporate sustainability? 먼저 벤 칼데콧 교수의 답변이 있겠습니다.
First, we'll hear from Professor Caldecott.
Thank you. Yes, that's a really important question. I think I addressed some of that in the presentation, but the reason it's grown so quickly is because the factors are material. They're having an impact on the value of companies, and a lot of these things are disrupting sectors, right? And I gave some examples, for example, in the automobile industry and the power sector. But you can point to almost any sector of the global economy and point to how material ESG factors are affecting firm value. And people may have made money and lost money on the basis of ESG, and that's why it's become so important. Now, there's still big challenges. What's the right way of measuring ESG factors? How do you do that appropriately? What's actually material? How do you cut through the noise? These are really important questions, and those are things that I'm working on at Oxford, but also I know colleagues on this panel in this conference are also thinking about profoundly.
Thank you very much. As we have heard from Professor Caldecott, he has said that in all industries, in evaluating corporate values, ESG must be included, whether it's automobile industry or other industries. Now we are going to ask Senior Advisor Michael Sheren for his answer.
That's a great question. ESG has become absolutely critical in both governance as well as how corporates act around the world. Now, there's a variety of reasons for that. Most companies, they're in business to make a product or a service that's profitable. And what we have found at some of our research at the Bank of England is that companies that actually do ESG, do very well profitably. Now, mind you, we haven't done across the entire board, but a good example is around housing and around mortgages. So companies and banks that basically finance green, sustainable homes actually have less defaults and they perform better than those that don't. We understand that other similar ones. So if you're a business wanting to be ESG, can actually be quite profitable. But there's other reasons as well. So if you think about the S, it's a social element. How do you treat your employees? And I think during this crisis, it's a perfect example. Did your company send you a comfortable chair? Did they worry about your child care? Did they worry about things that are really important to you to allow you to continue to work well and be able to work well in a way that makes you feel comfortable? And that's the S part of ESG. And I think ultimately happy, satisfied employees are always a very good thing. And then G, and ultimately G is governance. That's your executive board, it's your non-executive board, and they make the big decisions. I mean, I spoke during my speech about the E elements, but let me give you one other good example on S and G. Harvey Weinstein, just a disastrous issue that he treated his employees and his customers dreadfully, horribly, criminally. And that's a giant S element. But at one point, his board knew about it. They didn't do anything. That's G. And ultimately, that company failed. The most powerful company in Hollywood, all its equity was wiped out because of the S and the G failures. So not only can ES and G make your company more profitable, but also it can save you from big risks that can cost your company as well. So it's both a profit enhancer, but also a protector of risk.
네, 마이클 셰런 영란은행 수석 고문.
That was Senior Advisor Michael Sheren. He said for ESG management, the companies that pay more attention to ESG initiatives are likely to be more profitable. I think that is a very common yet very critical knowledge. It has been shown in housing markets and how the employees are treated, and employee welfare services would determine the sustainability of many corporations. And all these can be judged and evaluated through CEO's determination and level of commitment. Next, we would like to ask Professor Park Kwangwoo, who is here on stage. He is an expert in this field. Professor Park? Whether it's industry or academia, everybody understands the importance of ESG and everybody is talking about it. But we have been actually discussing ESG from a long time ago, and especially as has been discussed as part of corporate social responsibility, CSR. So it goes back to 1970s and 80s. And corporations have been engaged in CSR activities, and there has been a lot of research in this area. And most of this research is focused on ways to improve corporate valuation through CSR activities. And towards the mid-1980s, around the United States and Europe, institutional investors have engaged in shareholder activism, and the independence and autonomy of board of directors has been strengthened. So that kind of discussion has been very vibrant till early 2000. In Korea, following the Asian financial crisis in the late 1990s, the governance improvement and restructuring of conglomerates through, trying to regulate the internal capital market and tunneling the regulations against that and governance structure has been discussed in depth. And in 2000, the importance of climate change has been emphasized around the world. And at the global level, there has been more efforts to respond to this crisis. So this is an era of E. CSR, Corporate Environment Responsibility, represents the importance of environment activities of corporations, and obviously there's a lot of research going on in that area. Professor Park, he has given us insightful comments about the historical context of ESG, how the market and academic circle has been paying attention to this area. Now, fourth, Director Piers Haben.
Well, you're right in saying that ESG factors seem to have become popular. I mean, I think they have been a driving force for some time, but what we have seen in particular, I think in recent years, is that the public perception of climate change as a risk and therefore the need to do something about it is very high. And so whilst I think risk managers have been looking at the kind of risks to an institution that they have faced from some of the climate-related issues for some time, I think there is now a sense that it's also imperative that they explain to society how they are mitigating some of those risks. So this is what I refer to in my speech as dual materiality, where you have risks to an individual institution and to society. I think that has come to the fore. And I think that has driven then banks management to not only worry about the risks to their bottom line, but also to think about how they are demonstrating to all of their stakeholders that they are meeting socially aligned goals. So I think the evidence that we have seen of, for example, climate change is now embedded in the popular imagination, and they are raising specific questions to banks which requires them to then articulate better. But I also think the terrible events that we've had in the last year or so with the pandemic, but the desire to maybe rebuild economies in a more green way gives us an opportunity, I think, to ensure that not only are the risks being mitigated, but there is active contribution. And I think there's some great opportunities for the green recovery. And so those two things, I think, coming together mean that, yes, ESG is popular, not before time, because whilst it seems to many of us to be new and we're searching for metrics, it's also too late. I mean, the idea that it's very hard for us to tell you exactly what proportion of lending is green today is very worrying when we need to be able to demonstrate real metrics and real change by 2030 and then again by 2050. So it's too early to be doing this in detail, but it's also too late. So we have a conundrum and we just need to press on.
Thank you very much, Director Piers Haben. He has said that corporate changes and changes in the financial community must be facilitated in a way that reflects the civil society's desires and intentions. And the citizens' perception of climate change has definitely escalated a lot, and that is leading to changes in the investment principles and practices around the world. Now, let me move on to the second question.
The relative importance of each factor of ESG can differ depending on the industry. For example, I can imagine that manufacturing industry, such as steel industry, would have high environmental risk, which belongs to E in the ESG, than other industries. So my question is the following. What do you think is the most important factor in ESG evaluation? 먼저 아까 그 순서와 같이.
So following the previous order, I would like to ask Professor Caldecott first.
So a really good question, a really difficult one to answer, and you partly answered it already in your question, right? Which is that it does depend a huge amount on the sector and the geography that you're operating in. So some ESG factors are just going to be less relevant to certain sectors in certain markets. However, I do think that both climate-related transition risk and climate-related physical risks are maybe first among ESG issues, or first among issues within the E category, and these things are also, they're challenges with measurement, absolutely, but a lot of these things can be measured now. I think the first thing to do, particularly on say physical risk, if you've got assets. Or companies that have already been affected by weather events, extreme weather events, that's probably going to get worse. You don't need some fancy model. If in the last 10 years you've got facilities that have been hammered by an extreme weather event, you should probably do some thinking about how you manage that risk in the future, because it will get worse. With climate-related transition risks, I think the starting point has to be doing a heat map on which sectors are causing the more of the problem. So which sectors are really polluting. And then I think one ESG risk, one E risk that people need to get much better at. We all need to get much better at. Is going to dominate. Well, not dominate. It's going to be very significant. Might not dominate, but it's going to be very significant. Is nature and biodiversity. So biodiversity-related risks, the impact on natural capital is going to need a huge amount of attention, and in some ways is much more urgent actually than climate change. You could argue. We have probably less than a decade to stop the widespread devastation of natural habitats and ecosystems. So expect more on that particular E factor in the near term.
네.
Thank you very much, Professor Caldecott. As I have mentioned in my question, it depends on the sector. and steel industry will be using a lot of coal, so E factor would be important for steel industry. But it's actually different from sector to sector and region to region, and these days we're experiencing more extreme weather events, and for the issue of biodiversity, the importance of E inside and outside the company has definitely increased. Next, I would like to move on to Senior Advisor Michael Sheren.
There are going to be sectors of the economy that will transition differently or less well or over time differently than others. And so consequently, the E and the S and the G will be treated differently. As you pointed out, in steel, there will be probably substitutes for steel in many products. I know that there's automobiles now made with carbon fiber because ultimately the steel is very difficult to make in a sustainable way, though it is possible. And there's some very, very good R&D going on that is part of that. As I mentioned before, things like coal, there are also substitutions on that. And that'll be, there's good jobs we've had in everything from solar and wind in the areas around that. But the S and G, as I mentioned, are very different pieces because one, the G is about the decisions to make which direction you go, versus the S on how the members of the company are treated, how they feel, how they're a part of that inclusion. Yeah, the G is ultimately the chairman of the board, the CEO, and the top management, because if they don't view S and E important, it doesn't happen. As I mentioned that example in Hollywood where the company just simply failed because the governance didn't take into a hold. So I agree. Absolutely, the G is the most important.
예, 재미있네요, 그죠?
That's interesting, actually.
오히려 마이클 셰런
So, Senior Advisor Michael Sheren has said that G is the most fundamental element of among ESG, and the CEO has to exercise proper leadership for successful E and S as well. E for steel and coal industries, they are now being replaced by eco-friendly materials. Professor Park, what's your take on that? I'm not asking you to come up with one single answer, but that is a great question indeed. And as you have mentioned, each element of ESG might be having a different impact from sector to sector. In ESG elements, well, the evaluation would have different combinations or priorities of these elements, and MSG evaluated the ESG ranking among listed countries around the world, but I think we should also have this kind of ranking by industry. And depending on the ownership structure of the company, some part of ESG elements might pose greater threats or risks. As Senior Advisor Michael Sheren has shared with us, he shared a very interesting case about Harvey Einstein. He was a very authoritative and dictator-like CEO that he has led to the bankruptcy of the company. So that was because the board of directors could not play a proper role, and that escalated the CEO risk of the company. And in a company called Namyang Dairy, we have seen the similar case. So this is an issue related to ownership structure. And also in decentralized ownership structure, if the board of directors is too strong, then let's say there was a CEO who was very much interested in ESG, and that CEO ended up being firing by a very excessively independent board of directors. So the proper ownership structure must be sought after. And by early 2010, there was not much attention on the E element, but these days, in order to meet the Paris Agreement requirements, E has definitely emerged as a very important factor, especially among Asian countries. So to share the conclusion with you, in ESG evaluation, we have to consider industry, sector, national characteristics, and the ownership structure of the corporation. Thank you very much, Professor Park.
Piers Haben.
And now, Director Piers Haben.
답변 또한 듣겠습니다.
Well, I think here it would be erroneous for me to talk about the most important factor. Again, I'm sure that my colleagues in Korean public service would agree as well that, you know, it's absolutely imperative that we think about all three factors, E, S, and G. And whilst what is true is that in terms of sequencing, we are moving into a space where we have a much clearer idea as to how to articulate the environmental and particularly the climate change risks. We're able to understand the changes in climate change to the world, and we're able to articulate what that means in relation to specific lending. So I think that a lot of the work that we're doing is starting in relation to the E part of S and G, and in particular climate change. But I don't think that those other factors are less important, and I suspect we will come to those factors with more details. But let's be very clear. If today we have social risks such as child labor, I am very confident that that is a major issue for any financial institution. Similarly, money laundering as a governance risk, I think, is a key risk today and is taken very seriously. And I know that money laundering and financing of terrorism is taken very seriously in Korea. And so I think that it would be wrong to say that one is more important, but it's true that in terms of sequencing, we're focusing a lot of the detail on the E part now. And in some ways, it might be easier to sort of measure and define some of those parts in relation to E. It can be a little bit more qualitative assessment in relation to social and governance issues. And we're going to have to work hard to get some meaningful metrics on those going forward.
예, 다 들으셨겠지만
As you heard, everything's important, but in case of E, it might be more important because not only the environment, but also there's a climate change. It's directly linked with the carbon emissions. It's measurable, and also we can identify the performance. That is why everything's are taken in a very meticulous way. But in case of G, not only quantitatively, but also qualitative measurements are being done, like a child labor, etc. There are some differences, but in the end, all three elements of the ESG are critical.
Thank you very much. Now let me move on to the third question.
The carbon-based economy is about to face structural decline due to the global efforts to tackle climate crisis and the expansion of renewable energy. This might lead to trillions of dollars of stranded assets across the corporate sector. Will this fundamental change become a global trend? What will be the role of the financial sector in the phase-out of carbon economy in terms of ESG investment? 먼저 벤 칼데콧 교수의 답변을 듣겠습니다.
First, we'll hear from Professor Caldecott.
So, yeah, I mean, stranded assets is a massive challenge. It is a structural change for fossil fuel industries. I think not just because of climate change, but for a whole bunch of reasons: technological change, competition, and that's going to have a big impact on counterparties and on corporations. And the primary way in which the financial services sector can support companies is through transition finance. It's providing the products and services to help their clients transition to net zero. And all financial services companies need to think about how they can cater to their clients, to support their clients to become much more sustainable over time. And it's a huge commercial opportunity for financial institutions, for providers of capital. And they should see it in that way, because their clients will need any number of financing facilities, financial products, financial services in the future. They'll need them over the long run, and so I think that's the main way. Transition finance.
Well, very simple answer. Once again, he emphasized that in the carbon economy, we need to transition into decarbonized economy. And also, in this process, we might face with a stranded asset. But once again, in order to achieve transitional finance, we need to once again play important role.
Next to Senior Advisor Michael Sheren.
That again is, you just have nothing but great questions. That question again is absolutely important. It's on the minds of people, those that are the employees, the bankers, and to your point, yes, there will be decline. There is decline already in coal. You've watched the value of many of their shares go down meaningfully. And unfortunately, the negative externalities we talked about, both the carbon and the NOx and the variety of other particles that go in the air. And they may not, as you said, they may lead to stranded assets. Actually, there are already stranded assets in these areas. I know of a bank that holds a loan on a coal company. It can't sell it at any price. So stranded assets are already here, both financial assets, which are loans on them, and the physical stranded asset is actual plant itself. So those already exist. So the most important thing on that is obviously not to build more, because we can, as I mentioned earlier in my chat, you can actually produce a gigawatt of power cheaper in both wind and solar. So A, it's cheaper, B, it's cleaner. So the most important thing on the financing side is banks and governments should be financing the renewable energy rather than putting their money into something that will either be a stranded financial asset, which is their loan and bond, or a stranded physical asset. So I think this is very, very important. This is, again, where Korea's lead in R&D is going to be important, and where Korea's leadership in industrial expertise will be absolutely key in coming up with solutions that make this actually an opportunity. So the areas that are declining may decline, but the new jobs and the new opportunities will actually make this not a decline of the global economy, but quite the opposite, an ascent of the global economy.
Thank you very much, Senior Advisor Michael Sheren. As you have said, these are already considered as stranded assets, especially CO2 intensive industries like coal industry are already seen and treated like stranded assets. Any new loans or financing for those industry would be very difficult to happen. And as an alternative, solar energy, photovoltaic energy, solar energy are emerging as a very alternative and attractive solution, and Korea can make a great contribution in this regard. Professor Park, can you talk about E aspect of ESG? That is a very important question. To become a carbon zero country, the efforts to transform our industry is bringing about structural changes in our industries. Throughout history, when there was a regulation change or technology innovation, there has been a lot of changes in the industrial structure. 100 years ago, when taxis were first introduced in Gyeongsang, many people lost their work. People who used to pull carts for passengers, they lost their jobs when the taxis were first introduced, and this led to some kind of strike. And Hyundai Motors, once they begin commercializing electric vehicles, then the people who are manufacturing internal combustion engine cars will lose their jobs. So people who were traditionally employed in conventional industries, can they move to new emerging industries like electric vehicles? Well, I think securing jobs for these people would be the most important task. So we should enable them to move on to new industries and get jobs in the new renewable industries. not just for the automobile industry, but people who were employed in traditional manufacturing industries should be able to move on to new and up-and-coming industries like photovoltaic, solar farms, or wind farms, and they would also need financial support and support for educational and training. They are very much urgently in need. So that's a very interesting comment. Well, KAIST is an engineering-based school. So when it comes to mechanical engineering, automotive industries, and engineering, is one of the strengths of KAIST. And in this rapid conversion from ICE to electric vehicle, there could be some conflicts. Yes, there could be technology-oriented changes and policy-oriented changes, like the Korean government is moving away from nuclear reactors or nuclear power plants, and we have seen a great decline in the number of students who are willing to study nuclear engineering. And well, nuclear energy is a clean source of energy, actually, so that is creating new perspectives about nuclear power plants. And once you major in certain fields, you want to naturally pursue career in the field, right? But in response to policy changes, we have to consider the supply and demand of the related talents and human resources. Well, actually, in European Union, they have Green Deal or decarbonization programs, and they're very actively pursuing this with legislation. And they also have this so-called Just Transition Fund, JTF. So people who lose competitiveness or industries that could be stranded assets would require financial supports and training supports, and they already have more than 50 trillion won of financial asset for that fund, and they also have the funding mechanism designed. So they have a very granular plan to support this major transformation of economy and trying to tackle side effects such as loss of jobs. Next, Director Piers Haben.
I mean, this is a very interesting question. I think goes to the heart of some of the risks facing financial institutions as well as the risks to society. And I think there is an alignment between the risks to financial institutions and the risks to society. But we should be very clear as public authorities, as prudential authorities, our job is not to tell banks how to allocate capital, but rather to make sure that they are very clear in identifying the risks, but also in identifying their own ESG strategies and how they are going to meet those ESG strategies. But the risk of stranded assets is high, and so it's imperative that even if that risk is 20 years down the line, that we facilitate the environment, and there is a public good element here. We facilitate the environment so that those risks can be identified, measured, and monitored, and if necessary, acted upon now. And I think for banks, it's in their interest to identify future risks and to take actions now to reduce exposures. But it's also true that there is a role for the financial sector in financing the transition, whether that be making existing energies cleaner, or that may be financing new energies and enabling the shift of resources, by which I also mean people, workers, as well as technology and capital, into those new areas in order to ensure that the transition works.
Yes, once again, Director Haben agreed with Professor Park Kwangwoo. Transitions of the industry must be carried out naturally without any side effects, which means that financing must be focused on the transitional financing. in a nutshell, from the banking institution, we need to identify where the risk lies. And even though those risks doesn't happen right now, even though it might happen in some few decades, we need to be prepared for that.
Now I have prepared some individual questions for the 4 panelists. So first, to Director Piers Haben.
What challenges do EU banks face when they attempt to promote green finance?
Well, I suspect that the challenges at EU banks are very much aligned with the challenges that banks for everyone in the audience faces. And for me, actually, I would say that a key challenge is measuring and meaning. So metrics and meaning, let's put it like that, because in the first instance, in order to understand the risks and also understand how we're going to mitigate those risks and change our economies, we need to get some data. And we don't have that data at the moment in the way we would like it. We haven't traditionally collected data around ESG factors. So we need to work with financial institutions and their customers. And it's imperative that we facilitate the work of getting data from customers in order for financial institutions to get that data, whether that be pinpoint accuracy data today or it be proxies and estimates, which might be something we have to live with in the coming years. But to make sure that we have a common effort to get that data so that financial institutions can identify where they are. But then secondly, the meaning part, to be able to convey what that means. I think the green asset ratio is a key ratio to understand how green an individual bank's or the sector's lending is today. But what's important is to convey that that only tells you a little bit about how the economy works today. And actually what's important is to understand how then those metrics may change over time as the economy goes through this transition. So getting the metrics, but then explaining what they mean will be key. Metrics and meaning is a massive challenge for us.
Thank you. Yes, Director Piers Haben emphasized once again during his presentations about the importance of the metrics. In order to evaluate ESG, the most important thing is evaluation or using metrics, and also identify the meaning. And he stressed those points again.
Next question. Next question is to Senior Advisor Michael Sheren from Bank of England.
Korea. The Central Bank of the Republic of Korea also pays attention to the investors' risks and the trend of global financial industry regarding climate-related issues. How does the Bank of England supervise and manage climate-related financial risks?
I'm very proud to tell you that the Bank of England is very involved in doing our part in climate change. Now, central banks are very focused organizations. Each one has a slightly different mandate or statutory obligations. So for the Bank of England, we're obligated to focus on safety and soundness of both depositors and banks. We worry about making sure their deposits are safe, insurance companies are safe, and also financial stability. So everything we do looks to protect those areas. And we view climate as a risk to financial stability, and we view it as a risk to safety and soundness of banks and insurance companies. So consequently, what we've done, and by the way, this started quite some time ago. It certainly got a lot of publicity when Mark Carney came onto the international stage as the head of the FSB and the Bank of England. But we were actively working on this even before, but Mark really took it up another level. And with Andrew Bailey allowing for the G20, so we had full buy-in, not only from our governors, but also the deputy governors. I'm a senior advisor. So even 6-7 years ago, the Bank of England senior management recognized the risks that climate posed to the citizens, the depositors, the insurance people within. So what have we done since then? Well, first thing, by just even talking about it, is signaling to the global markets. Secondly, we've done huge amounts of research. We've written reports that we've done about the insurance industry. We've done reports on the risks to the banking industry. And now this year, we're going to do a stress test on all of our biggest banks, in which they're going to have to look at their exposures to climate risk and environmental risk. And then lastly, we cooperate with other banks. Like I've visited the Korean Central Bank every time I've been to Korea to talk to them. So we cooperate with other central banks, both through the NGFS, the G20, as well as when we visit other countries. So a combination of policies, stress testing, cooperation with others. We recognize the risks and we're doing everything we can to mitigate the risks.
Yeah, Sheren.
So that was Senior Advisor Michael Sheren. Thank you very much for the insightful comments, and he's willing to collaborate with the Bank of Korea as well. Well, actually, last year, I think the Bank of Korea, for the first time, asked me to talk about climate risk and asked me to make a presentation. That means Central Bank of Korea is now beginning to pay more attention to climate risk around the year 2020, and the international community has definitely been more aware of climate risk as a result of pandemic. And the Bank of Korea is collaborating and working with various financial industry stakeholders like banks and insurance companies, and will continue to play a very active role in this area. And now, Professor Ben Caldecott.
In Korea recently, the financial sector and industries are very interested in green bonds. However, evaluations are mixed about how well issued green bonds are conforming to ESG principles. So the importance of ESG taxonomy or green taxonomy is emerging. What tools can we implement to prevent corporate greenwashing?
Yeah, a really good question, and mission critical for the future of sustainable finance. We need to address greenwashing, false claims across the industry, and if we don't, it risks losing credibility, and the progress and the great work that has been undertaken, has been made over the last few years will come to nothing. So this is really important. Now, I have a slightly different view from some colleagues about the importance of a green taxonomy. I don't think the way of dealing with greenwashing is actually best served by some sort of green taxonomy that's set in the way that it has been in some jurisdictions. So, for example, the EU green taxonomy process has been characterized by huge amounts of corporate lobbying, watering down of thresholds, and so on and so forth. I think that actually potentially makes the problem worse. When we have dealt with cases of mis-selling in the past in different sectors, including the financial services sector, the best way, in my view, to do it is to have empowered regulators enforce the rules, and also to provide information to clients to help them decide whether the products and services they're being sold are affected by greenwashing. You know, if you're an asset manager, for example, and you're saying, invest in my fund and I'm going to, save the rainforests in Borneo, then you can make that claim, but you've got to demonstrate how you're going to do it. How are you going to do it? How are you going to measure progress towards doing it? And if you can't do that, you shouldn't be allowed to sell that product, or at least you shouldn't be allowed to make those claims. And that's the role of the regulator. Ask some simple questions. How are you going to do that? Can you measure your progress towards doing it? The other thing is, the sustainable finance is developing very rapidly. I think, net zero, for example, only really became a big thing in the last couple of years. If you set in aspic a certain view, you risk actually constraining innovation. This is changing very rapidly. We need to support innovation in this space, not constrain it. I mean, if there's a role for a taxonomy, in my view, it's primarily around identifying, being clear about what the polluting things are. So it's a brown taxonomy. We need to target the really polluting assets and get them out of portfolios and manage them, get them out of the economy. So I think a brown taxonomy, not a green taxonomy, to deal with greenwashing much more empowered regulation and a dose of common sense, I think will get us quite far.
Well, thank you. As you heard from the Professor Ben Caldecott, because of the inconsistent taxonomy, for example, this is green or this is not, that kind of taxonomy can cause side effect or counter effect, or it can complicate the things. So regulatory agency must play active role, and that's more important.
Next. This is going to be the last question for this panel discussion. This is a question to Professor Park. Regarding ESG, you might have heard about shareholder capitalism and stakeholder economy. And there has been some debate as to why we need to move to stakeholder economy. Those who champion stakeholder economy say that this is going to be a very critical factor for success in transformation to ESG management. So, Professor Park, what's your opinion on stakeholder economy? That is a very interesting question, and thank you for the question. Actually, the chairman of SK, K-Tion, has made the exact same comment when he visited the United States with President Moon. He said that he supports transformation or conversion to stakeholder economy, and I also support stakeholder economy. As you're well aware, stakeholder economy is when the corporations target maximizing the profits and benefits for not just the shareholders, but everybody involved, like the government, citizens, NGOs, and the local community. All the stakeholders of the community or the company should benefit from increased benefit of the company. As I was observing the progression of this debate, those who oppose stakeholder economy, well, many of them studied law, and Professor Petchok from Harvard Law School and those who follow him are saying that board of directors should represent shareholders, and any decisions that goes against the benefits of shareholders, like providing benefits to suppliers or employees or to local communities, the board of directors should stand opposed to such decisions. However, Professor Alex Edmondson from London Business Schools and those who support him say that if you treat your employees better, they will work harder, and that will enhance the value of the corporation. So the overall size of the corporate value pie will be increased. So the pie could be split into a larger number of pieces, enough to benefit local communities and all the stakeholders, and the shareholders will also benefit from the bigger size of the pie. So I think that corporations should be mindful of the needs of suppliers and employees, and then the benefits will ultimately go back to everyone. And I really think that the corporation should support the employees better. And also, for governance side, and Harvey Einstein case was referred to. Like, if the board of directors couldn't stop him, the employees might have stopped him if they were properly treated. So don't leave everything to board of directors. Employees-based management with satisfied employees will be most optimal. As I was following this debate, Well, depending on the tendency and priorities of the scholars involved, they might have different approach, suggest different approaches. But as we are now understanding the importance of ESG around the world, I think we are all converging in one direction. We have to protect the environment, be socially responsible, and come out with strong and transparent governance structure. And this is in the benefit of stakeholders and ultimately for shareholders. So that will ultimately enhance corporate value, promoting sustainable growth and management. I think that is the most important point of ESG. BlackRock has been emphasizing this all along. Among major Korean companies, well, the BlackRock, the biggest asset management company around the world, is major investors in many of Korean corporations, and BlackRock has been emphasizing the importance of ESG initiatives in growing corporate value, and the market environment is truly changing, and consumers and investors are paying attention to that. Do you have anything more to add? Well, the moderator has done an excellent job of summing up the panel discussion that we've had today. Well, I think we'll continue to see redefinition of corporate value with more emphasis being placed on ESG management. The goal of corporations should not be just maximizing shareholder wealth, but should be to minimize carbon emission and come up with environmentally friendly substitutes, making social contribution for the local community, and corporations should have an inclusive goal, including all of this, and the board of directors rules should also be defined. They are not just working for maximization of shareholder profits, but to maximize the benefits for all stakeholders. Thank you very much. I hope you have enjoyed the second session, panel discussion on green leadership for global sustainable growth. And ESG is the most widely discussed topic of the day, and financial institutions should be able to support transformation to global sustainable growth. And we have talked about the future directions and approaches. In the past, this was not in the mainstream discussion, but now it is definitely in the mainstream, and financial industry is paying very close attention to ESG, and the leadership would be most critical. Corporate leadership as well as state leadership will be very important. ESG will support governments' initiatives like eliminating carbon emission, promoting transparency in state affairs, putting the orders in place. All of this falls in the category and boundary of the government affairs, and this is really related to global leadership with a strengthening of civic mindset. So now I would like to conclude second session. So I think the moderator, our MC, is supposed to say that. No, that's okay. So I would like to wrap up second session now. So please give the two panelists a big round of applause. In order to achieve sustainable growth in the global market, we have talked about the desirable direction for our financial industry, and we also like to thank the three speakers from Europe. So now we have wrapped up the morning session with the keynote presentations and panel discussion. The afternoon session will resume at 1 o'clock. In the afternoon session, we are going to talk about the future and the growth of sustainable investment. We will hear from Deputy Director Choi Ji-woo from Green Climate Fund and Ms. Eugenia Kove, the Head of Sustainable Investment at Standard Chartered Bank. We'll see you at 1 o'clock.